Hello. Hi, everyone. For those that don't, sorry, I've lost my voice a little bit, lots of talking over the weekend. For those that don't know who I am, my real name's Dave, but you might know me online as ASX Trader. Today I'm going to give you a little bit of an educational piece around the secrets of the market and how they move. So a little bit about me. I'm an authorized representative of ShareX, so I do traditional markets as well as crypto as well. But me, I was actually a primary school teacher for 15 years beforehand. So I've got a Bachelor of Education. I'm a certified financial technician through the International Federation of Technical Analysis and a certified level 1 elitician as well. So that's the education that I've had in this space so far. So right now, if I were to say to you, how do the markets move? What would you say? Moon? I think we all hope they do. The minute we buy, we want them to go green and go to the sky. But unfortunately, they don't always do that, unless you've been buying some meme coins lately. They zig and they zag. Okay, that is how markets move. And what I'm going to share with you today is there's actually a secret around the way that they zig and they zag throughout the market as well. So when I talk about zig and zag, the zig is the primary move, and the zag is the retracement from that move after it happens. So whenever you get a zag, typically, and again, whenever you're trading, it's all about probabilities, okay? It's always about what's a high probability setup and a high probability reason to take the trade. And I'd say 70 to 80% of the time, the zag zone will come down to what's called a golden pocket. This is what's called a Fibonacci retracement that comes between the Fibonacci 382 and the 618. And this is something that Charles Dow discovered in the 1800s. He's the person that invented technical analysis. And he discovered that the markets, they zig and they zag. And when they have that zag, they have a 1/3 to 2/3 retracement. Okay, and I'm going to show you how many times that's happened throughout Apple. Okay, it was the #1 stock up until recently with NVIDIA, but from the tech bubble bottom, it has bounced off that zag zone every single time. So as you can see there, we went up to the top of the GFC, and then the zag zone came down to your golden pocket and bounced off the Fib 618. Then after that, it went up again, up until 2013, and then it bounced off the Fib 500 off the zag zone again. Then again, it went off again and bounced off the next zag zone off the Fib 500 618 zone. Then again, up to the 2018 period, bounced off the zag zone again. So they zig, they zag, zig, zag, and so on. Recently, during the COVID drop, again, if you were looking at it, doing your Fibonacci retracement off the 618 zone as well. More recently, during the 2022 bear market, coming down to the Fib 382 zone, and then the very recent move was bouncing off that move there. Okay, so from the bottom of the tech bubble in 2003, if you had just known to buy off that zag zone, you could have made an absolute fortune just buying off that pocket zone there. There's a little bit more to it than that though. It's not just zig-zag, zig-zag. So how the market actually works is you have 3 steps forward, 2 steps back. 3 steps forward, 2 steps back. So if you always have that in your mind, you can kind of discover the secret. So as I talked about, we zig, we zag, we zig, we zag to our next golden pocket again, and then we zig again. As you can see there, 1, 2, 3. 3 moves forward, then we have 2 steps back. So what happens now is after we have the 3 steps forward, we then actually retrace the whole move from the 3 steps forward. So then we actually come down to the golden pocket of the whole move and retrace it. And these are the moves that get people off guard and the ones where you think things are over and over and that. I'm going to show you an example now how that has worked in the traditional markets before we move into the crypto markets. So after that, you then move again, zig, zag, zig, zag, zig. 3 moves up, 2 back. And again, like I talked about, this was discovered by Charles Dow, that the primary trend moves in 3 phases. And he found that they were broken up into 3 very distinct phases. You have the accumulation phase, which is where people don't really have eyes on it, no one's really aware. Then you have the public participation phase, which is where we get involved. That's where we start to be aware, oh, maybe this is a good investment, maybe this thing's gonna go somewhere. Then you get what's called the excess phase, and that's where everybody is universally bullish. You can't even imagine the thing going down, and up only. It's that up only mindset. If you're even a bear, you're ridiculed for even thinking that way because everyone's on that one mindset. As we know, 3 moves up, 2 moves down, so accumulation, public, excess, what do you think happens after the excess phase? You correct the whole move, okay? And the main reason markets move like this is because of human psychology, human behavior. So the psychology during the accumulation phase is really, not too sure, might not be real, you know, there's a lot of doubt. The public, you can see when the confidence starts to come in, people start going, maybe this is it, maybe this is good, I think we're onto something. And then the excess phase is when you're in that mass euphoria. Okay, so you really want to always match the sentiment to where you are in the stages as well. So like I talked about, after your 3 steps forward, what do you get? Your 2 steps back. So then you will correct to the Zag zone of that whole thing. Okay, so now I'm going to show you how that's worked throughout our own Australian index from the 1980s. So here, this is back in 1980, all the way up to the 1987 horrific crash, which you've probably heard many a horror story about. So that 87 crash seemed like the end of the world at the time, but all it was actually doing was correcting the whole move from 1980 to 1987. So it was correcting a 7-year movement. And if you look, you can see what did it bounce off? The Fib 618 level came to the Zag zone. So what seemed like the end of the world and seemed like, oh my God, stocks are going to zero, ended up just being a normal, typical correction to the Zag zone, which is where we should be buying, in that Zag zone. So that was 1980 to 1987. Then from there, what did we have? We then kept going up to the GFC. So if you look at that picture now, that where I've got that little 1, that was that whole move that I just showed you. That was a 5-wave move up that then corrected to the 87 crash. That whole move now became the accumulation phase of the bigger move. See how it goes on and on and on? So then it went up to the wave 3, which was the tech bubble pop. We corrected the tech bubble pop. We had our Zag zone. You can normally identify an excess phase, because how do you think an excess phase moves? Like a rocket, okay? And you can see it there, how rapid and fast it moves, and that's when you know you're typically in that excess phase there as well. So again, the GFC, the end of the world, everything's collapsing. What was it actually doing? It was correcting the move from 1980 to 2007. So it was correcting a 27-year move. 3 up, 2 back, okay? And that's how the markets move. Here you can see from the bottom of the GFC up until recently, the COVID drop. Again, zig, zag to the golden ratio, zig, zag to the golden ratio, zig. What do we then do for COVID? Correct the whole move again. And COVID hit the Fib 618. So again, COVID was in the world, things were looking really bad. What was it doing? It was just correcting the move from the GFC. All right, let's move into what we're here today, crypto. And one of our favorite coins, Solana. Bet we all wish we bought Solana back at $8, right? Let me show you how using this, you could have bought Solana at $8. So, Solana was $1 on the last bull market. It went from $1 up to nearly $40. That's its first move up. What do we get after a zig? We get a zag to the golden pocket. What did it bounce off? The Fib 618. After that zag, what do we get? We get another zig. That zig went up to $220. What do we get after that? We get another zag that comes down to the golden pocket. We came down to the Fib 500 at $120. Knowing that, we've had one big zig, one big zag, one big zig, one big zag. We've got one more zig left, which is the excess phase. What do we do after that? We correct the whole move. This was what I identified in November 2021, seeing the 5 waves up on bearish divergence. These are things that you can see, because in the excess phase, it's not institutional money coming in, it's you guys. It's retail money doing small bids. You can see these things in volume, momentum, things like that. So from there, we then corrected the whole move down to the Zag zone, the Fib 382 to the 618. You can see way at the bottom, the Fib 618 at $8 something. So knowing that that was a Zag zone where you would have been looking at that zone to know to buy to buy Sol. This was a post that I did December 2022 around that, when Sol was $250. I mentioned it's going below 40, possibly even single digits. Honestly, I didn't think it would go there. I thought it would go to the Fib 382, but I know that it was going to go around that area most likely. Again, when I said that, laughed at, never going to happen, because we were in the excess phase, okay? From there, finally hit the buying zone, and what I'm trying to say there is, you know, Michael Saylor has said these outlandish targets for Bitcoin. It's possible, okay? Anything is possible to the upside and the downside in markets. You must be aware of that. Then from there, it punched off, and then in July, it broke the long-term decline, changed market structure, and then you could have seen Sol breaking up at the $22 mark there and $27 mark. And then you can see there, 15th of July, we've broken through resistance. We're ready for liftoff. So Sol at 20 bucks, where are we at now? 250 bucks. Could have had an easy 10x just following the zigs and the zags, following your market structure. All right, Ethereum, same thing. Back in the COVID lows, when I told my brother to buy a whole bunch of it as well, he sold too early. He sold on this peak. He'd never experienced the crypto bull market before. Zig and the Zag, where did it come down to? The Fib 382. What did we get after that? Another Zig. What did we then get? A Zag down to the Fib 618. What are we going to get now? The final Zig, 5 up. What are we going to do? Correct the whole move. Okay, something again I identified November 2021, bearish divergence, going to get your retracement. It's the same thing, bringing it back down to that golden ratio. You can see Ethereum was actually stronger than Sol, because Sol came down to the Fib 618. Ethereum only came down to the Fib 382. So identifying that Zag zone, seeing the change of structure, again, you can see that it seemed like the end of the world. So Ethereum going for $4,000 down to $800-900 bucks, but it was just correcting its whole existence. Okay, so when you understand these movements, you understand it's all part of the cycle. Dogecoin, bet we all wish we bought that sucker back in the day, hey? Personally, I had 4 million Doge in the 2018 cycle. And I thought, you know what, these guys are going to be smarter this cycle. They'll realize that all the shit coins that do nothing are going to kind of go extinct, and they'll put it into good stuff. So I swapped all my Doge for Ethereum in 2018, thinking I was being smart, that this time they'd be, so, you know, I still got a 10x on Ethereum, but it was nowhere near the gains it would have had on Doge, unfortunately. But again, had it zig from 0.0001 cent, zagged, had your 5 waves up, as you can see there. So this move, we've just had it on Doge. What has it come down to? It's come down to our Fib 382 Zag zone. Okay, so the reason why it seems so bad is because you guys forget Doge was 0.0001 cent. You know, it did a 10,000% move. So it's correcting its whole move. What seemed terrific to us was actually, you know, if you were down in that accumulation phase like some of them were, it's still nothing. All right, the one we all care about now, Bitcoin. So Bitcoin from the 15K low. You can see you had your first zig up, then you can see we had our first sag down to that move there. Then from there we had our next zig up. Then we had a zag down, which was the banking crisis in March, hit the Fib 618. What are we going to do now? We're going to get our final move up, and then we're going to correct the whole move. So that blue box there is correcting that first move up. Okay, so zig, zag to the Fib 382. So then now that we've corrected the whole move up, what do? We zig again. So we go up again, zig, And you can see there, zigzag, zigzag, zig. And this very recent move that we've just had, that we had consolidation for 6 months, from March till September, all that was doing was correcting the move from $30,000 to $72,000. Okay, and it's come down. Where did it bounce off? The Fib 500. Okay, so the last time it was the Fib 382, this time it's the Fib 500. Again, something that I identified back there in July when up there. We're going to head down that zone. The reason why I had that as a key level is because that's where the Bitcoin ETF launch happened. And if we broke below that level, and then we went up, went sideways and broke below that level, then you'd have to wonder, why are they selling up there? It might have been a sell the news event. Just like when the FTX collapse happened, when it came up and went back through there, you know that was a buy the news event. Okay, so if we ever break that 48K, it would have been really bad. To be honest, I personally thought it was going to, but I was proven wrong. And the minute market structure changed and we went back up, I had to swallow my pride and realize in September, crap, we're going up, get on the horse and let's go. So then we went up for the next one. So now you guys know we're in the excess phase for Bitcoin. Just like you can find retracements to know where the Zag is coming to, you can also use extensions to know where it could go to as well. And the key word there is could. So that doesn't mean you sell when it gets to these levels. What it means is when it gets to these levels, you watch for weakness and you watch for a change in market structure. So key levels that I'm personally looking at are 107, 120 to 125, and that 140 to 145. They are the key Fibonacci extension levels that I'll be keeping an eye on to see if I see any weakness from there. Okay, so again, doesn't mean you sell there, they're just key levels to keep an eye on. The good thing is, when Bitcoin moves into this phase, altcoins are actually moving into the public participation phase. So if you've missed Bitcoin, you haven't missed anything, because the moves that you get in altcoins right now far outperform the moves in Bitcoin. Okay, the crypto market works very much like the traditional markets, very much like the commodity sector. Gold will show its hand first, break up, then money goes into silver, platinum, all the other metals, soft metals, and it goes down to things. Same as real estate. Money will flow into Sydney, Melbourne, your top ones first, then it goes into your other capital cities, then it goes into your other larger cities, and then your rural areas. You kind of know where your cycles are. Okay, it always goes into the best of the best first. So you guys are at, probably the best thing you've ever done coming to this crypto convention this weekend, because you're about to enter, very likely, your altcoin season, which is where the biggest gains are about to happen. So the question we want to know, when do we exit? How do you know when to get out of the market? Let's use Apple first as an example. They are all the red boxes that I showed you at the beginning of the session. As we know, Apple has been bought off the Zag zone every single time. So the minute that it's not bought off the Zag zone, you've got to wonder why. What has changed? What is happening? Because the minute the market is doing something different, you've got to think why. So if Apple never got bought off that Zag zone next time, if we retraced that move and it didn't get bought off, that would be a sign of weakness to me. And that is exactly how I knew to get out of Bitcoin last time, back in the March 2021. So as we came up here, you can see we had our Zig and our Zag, and we bounced off that Fib 382. Okay, so up to 40K, down to 28K. Then from there, we had another Zig and a Zag. And we got bought off the Fib 500. Then after that, we had another Zig and a Zag, and we got bought off the Fib 618. Then after the next move, see that little red box? Did buyers step in there? No, something changed. Why were they not buying off my Zag zone anymore? Showing weakness. And what you can see is then we actually then broke below the other pit, you can know something's changed. Okay, so whenever they're not buying off the Zag zone, that's supposed to be the place where they buy. So when they're not buying there, you've got to ask why. Okay, it's just a little something to keep an eye on. So just to finish up, guys, I guess, why does technical analysis work? You know, I was a non-believer back in the day until I actually, again, it's easy to be a non-believer when you haven't actually done it to disprove it. But if you actually know why the markets move the way they do, the answer's in Google. What volume is made up on bots on the stock market? Stock trading platforms are now responsible for 78% of all of today's stock market trades. and as much as 90% on crypto market trades. So the majority of the volume on traditional and crypto markets is done by bots. What do you think those bots are programmed with? They're programmed with technical analysis. Okay, so that's why they're being bought and sold. So that's pretty much 80% of the volume is done by bots. Then underneath that, who's the biggest amount of volume after bots? It'll be your fund managers. And 87% of fund managers have all admitted to using some form of TA. So if you've got 80% is already bots, there's only 20% left over. From that 20% left over, 87% is the fund managers doing it. Who's the biggest ones after the fund managers? The traders that do it for a living like myself. What are you using TA? So who's not using TA? Your hodl, which they're not buying on the market every day because they buy and they hodl, or your retail investors. So if you don't understand the game and how it moves, you should be an investor, not a trader, okay? Because they actually target people like you. You're the people that they want to get the money off because they want you to get into that excess phase, take your money, okay? So you've got to understand how the markets move. That's it for today, guys. If you enjoyed the presentation and yeah, if you want to know anything else, there's a QR code there. And yeah, we've got some exciting things coming next year. And if you're interested, jump on the QR code. And I hope to hear from you soon.